First of all, Mike, do you share some of this pessimism about the consumer?
A little bit. I think the key issue is it depends. So, the last guest was talking about a lot of pressure in the retail space, maybe pull forward to October. November wasn't looking that good. I really think it depends what kind of retail sector you're looking at. So we generally prefer scale. We like barriers to entry. We like companies that are gaining share. You can find that out there in the market. Companies like Lowe's, for example. You're making a housing bet with something like that, but there really is a lot of scale. They've just come out. They've given guidance for next year to big analyst meetings. They're really baking in a lot of some potential pressure next year.
Yeah.
So I think there are ways to play retail without kind of getting burned among some of the smaller caps.
And we should be clear, and Jerry himself was very clear to say, look, I'm talking about kind of stuff you buy, maybe at a mall, but we're not talking about services. Are people simply going back to spending, as we've seen on those Taylor Swift concerts, maybe even some airfares, some vacations again? Is this just a mix shift?
We're seeing a little bit of that. Just it's been sort of this big cycle between the stay-at-home period during COVID, buying stuff. Now people are doing revenge travel, et cetera. So there's a little bit of a shift there. But I really think it depends. What angle are you looking at? So some people would say, well, I want services. I want to have a good experience. For example, I want to have a good home situation. So I'm going to go to home improvement. Others might say, well, I'm going to go and have some discretionary retail, et cetera. The other angle might be, despite some of that shift towards services, we are probably headed into a recession. And so generally people like to buy in bulk, scale up, et cetera. There are ways to own that theme as well. Even if goods in general are under pressure, something like a Costco, that may benefit as people look to buy bulk, even as that kind of mix from goods to services starts to shift.
Hey, Mike, guys, it's Frank Collin here. I want to switch away from retail just for a second. I want to get to one of the other picks. Ticker MMC, Marsh & McLennan. This is a conglomerate with insurance, investment business, $80 billion market cap, not a stock we talk about very often. Probably best known to our audience as the parent company of Mercer, an asset manager with about $350 billion in assets under management. In this current environment, what makes a company like this so attractive to you?
So really, this is a bit of a macro call. I think as you're heading into possibly a recession, you do want to have a pretty solid company in your corner. So Marsh Mac, really the big brokers, even Aon, they're in pretty good shape. A lot of times when there's fear in the market, that's generally helpful for insurance demand. People are really concerned. They want to stock up on insurance. A good way to own that theme is through the brokers. So Marsh Mac and even Aon have done pretty well. Looking into next year, if there is some type of slowdown, you are likely to see that again. Typically, these companies do pretty well through a recession. There is a little bit of a bottoms-up theme with reinsurance, so Marsh Mac is likely to have a big benefit there. And then among the brokers, Marsh Mac tends to service more of the mega cap type of companies. So if there's any pressure among small companies out there, I think Marsh Mac is better positioned. So good company, a pretty good part of the cycle, and I think something you want to own, at least for the defensive part of the portfolio.
Mike, before you go, do you want to just comment on where earnings are headed? Because like Bob Bassani said last hour, the market still looks overvalued if it's 19 times where kind of the top-down strategists are seeing things. Where do you see them, and what does that mean for stock prices right now?
Absolutely. So I would see some additional pressure on earnings. I mean, we can kind of start at a high level. We've got, Jay Powell really squeezing the economy. I think investors today are worried. They're seeing basically the ghost of Christmas future. Today retail sales are under pressure. What does that mean for the next 6 to 9 months? So as that filters down into earnings, we do see a bit more pressure. So typically in a recession, you're going to see profits come down 10, 15, maybe 20%. We're still in the early innings of that. So I think that's going to add to some investor volatility. As we get into the spring, I do think earnings are going to trickle down. You may get a tipping point where earnings are down, let's say 10%. Investors say, okay, we're going to look over the hill. Earnings may go down a little bit more, but we're likely to start buying. So that could be a bit more of a tactical buying opportunity looking into the spring.